Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters ahead of the opening bell. Last week was the second week of our model portfolio, risking no more than 1% per trade. And it was a green week, up $12,690. 4 green days, 1 red day, and that was the first losing day in the portfolio, bringing our total stats up to 30 trades, 22 wins, 8 losses. That is a 73% win rate with a total return of 21.83%. Friday's session was pretty straightforward. Flows were supportive going into the long weekend. The trend was up with the 20 EMA in green above the 40 EMA in red. We broke the previous session's high, that is your continuation signal, and we had a very logical upside target of 7,500. That was the call wall and the max call, which we did test. We broke it here temporarily on a news headline, and we did see some selling pressure into the close. As a matter of fact, we saw selling pressure at 2 points here on a weak Michigan Consumer Sentiment Report. That dip was bought, and then some weakness end of day closing back at the lows on the session. But overall, price was contained between two major levels, 7,500 on the upside, 7,470 and 7,465 the previous high on the downside, with 7,485 being a pivot point. For today, starting on the 15-minute time frame, the trend remains up with the 20 EMA in green above the 40 EMA in red. 5-minute time frame, bearish cross end of day Friday with the 20 EMA crossing below the 40 EMA and downsloping. In regards to levels, a bit of a shift up here, most notably the shift higher in the call wall from 7,500 last week to 7,600, but 7,500 still remains a big gamma level, that is G1. Previous session's high just above that, 7,506. So this is the first hurdle for the bulls. A break opens the door to 7,517, which is the SPY call wall and all-time high. And then above that, 7,530. 7,550, and then there's a zone up here between about 7,570 to 7,580, so about a 10-point zone, and then the SPX call wall at 7,600. On the downside, SPY flip level 7,467, previous low 7,463. That is support on the downside. If we break a flip, whether that's the SPX flip or the SPY flip, we always anticipate volatility to pick up as dealer hedging shifts. With that said, if we break, potential for more volatility with a gap on the downside, fill 74.45, that is a low liquidity zone. A break opens the door to potential support at 74.35, 74.30. Support is really not clean below 74.50, 45. If you recall last week, this was a big gamma cluster where we tend to see lower volatility, choppy type action. Not necessarily a gamma cluster here this week, but we have a very mixed profile below 7,500, and we'll highlight that here in a second on the gamma charts. Where major support lies on the downside is that 7,400 handle, SPX flip at 73.95, and then if we do break that flip, that would constitute risk off. And given the profile, it does look like that may materialize here. Now, this has been a pivot point. If we look at last week, we traded below it, we traded above it, and the flip is deemed neutral. In other words, fair value strike. So in the event of weakness here this week, and we can't break that 7,500 handle, 7,400 logical target. In terms of pre-market activity, I'm recording this early, but we are seeing a little bit of weakness in equities. VIX catching a bit of a bid back to the 17 handle, but there's been a lot of volatility in the extended hours due to a number of geopolitical headlines. And as we said last week, Monday, headline risk is high, and I think every day last week we saw some sort of headline sparking buying or selling. So once again, headline risk is high this week. Keep that news feed up and remain vigilant. In regards to volatility, the VIX is now at the lower bound at 16.5, 16. This has been a zone where we have seen a bid in volatility. On the upside, major resistance or a point where vol sellers have been active, 19, 19.3. So if you just look at the range, we are back down to the bottom of that range. So potential for a bit of a bid in volatility, which often correlates on a break of the flip level. And we struggle to see vol The VIX really pushing below this support zone ahead of core PCE on Thursday. Transitioning over to our dashboard, total gamma exposure is positive 1.1 billion notional, trading above our main transitional level of 73.95. That is the SPX flip. Now, above up to about 7,500 is a very mixed profile. Some strikes positive, some strikes negative, meaning there's just not clean control within that zone. We could see kind of more choppy action, potential for higher volatility, as we would be trading below the SPY flip level of 745. And if you want to know the SPX equivalent, just hover over the bar and it will give you the SPX. So 745 SPY is 7467. We highlighted this on the chart, which correlates with the previous session's low. So that is going to be pretty critical support. If we break, we could see kind of higher volatility within that range. Above 7,500, however, flows are going to become very supportive or continue to be supportive. And then we can see the upside call wall this week, 7,600. In terms of the implied move, 0.9%, I believe, 1%. So a little bit elevated volatility here. We have an implied low of 73.98, an implied high of 75.48 for today's session. Interestingly, on Friday, there was elevated activity for longer dated options, and we can see this by looking at the SPX open interest chain chart. New calls were added from 7,600 up to 7,725. Most notable strike being 76.30, where about 18.8 thousand new calls were added. There was also demand for puts relatively close to the money from 7,500 down to about 73.80, and the addition of these new puts is the reason why that gamma profile is much more neutral between 7,500 and 7,400. If you recall last week, this was not the case. All these strikes were positive, and there was a big gamma cluster between 7,400 and 7,450. Now, we know puts have been unloved. All has been crushed, but if we see that put demand pick up, that will most likely lead to a bid in volatility and will exacerbate the downside. So I think keep an eye on a couple things this week. Geopolitical headlines, of course, rising yields, which are a headwind for the AI theme. And if we do see weakness in the AI tech, that will exacerbate the downside, and volatility as we come out of the long weekend. On the calendar today, nothing super significant, but we do have a bit of a data dump here. Chicago Fed Index out at 8:30, Housing Price Index 9 o'clock, CB Consumer Confidence 10 o'clock, Dallas Fed Manufacturing 10:30, and the 2-year note auction at 1 p.m. Since yields are rising and they matter again, note auctions, bond auctions could garner a little bit more attention this week. If you want real-time SPX 0DTE trade alerts, plus the full framework to trade the market with Edge, join the team at 500edge.com.